And the end of that music and all those legalese means it's time for another episode of Trade Masters. Trade Masters brought to you by Tackle Trading. Go check out our 15-day free trial and be part of an amazing community. We have two coaches, part of that amazing community here with us today. And in Trade Masters, they come together and give us, let's be honest, what they do. They give us some picks midweek. So some midweek picks so that, oftentimes we've exhausted our weekend picks. It's midweek. They call it hump day for a reason. And here we get 10 different trade ideas, brought 5 by each coach. At the end, I declare a winner based on, whatever mood I'm in. I try to judge it based on the things I like given market conditions, but it's a little bit arbitrary, but we have fun with it. But most importantly, we get good quality picks and some education along the way. We have with us tonight defending champ Tyler Craig. How are you doing, Tyler?
What up? What up? I'm doing good. I'm excited to defend my title.
Ready to take on a quality challenger in the pure technician, Frank Martin.
I'm not scared. I'm not scared.
Yeah, Frank, how are you doing? It's good to have you back.
It's good to be here. It's good to be here. Yeah, I got the short notice, so that can hurt even a little bit more when I'm done with you, Tyler, is that it was a short notice day, and I'm still coming at you hard.
Bring it on. Bring it on.
That is the equivalent of someone saying, one hand tied behind my back, we play basketball. I need a challenge. I like it. Well, Tyler, as defending champ, you get to decide who goes first.
I'll defer to Mark, or not Mark. I will defer to you, Mark, whatever you'd like to do. But Frank, let's have you go first.
All right. I'll go first. I'm going to start with an actual position play today. A good, exciting utilities company. Everybody loves that for a trading idea, right? And that is SRE, Sempra Energy. So SRE, as you can kind of see here, has been in a pretty nice little range over the last couple of months, really, after breaking out of some pretty significant resistance at around 135. Very, very orderly, right? Had a big fire back here today. I don't know if there's any particular news. I didn't see anything that jumped out to me. I think these guys really stand out when you switch it over to a weekly time frame and can really appreciate that consolidation that we've seen over the last couple of months. This one's pretty straightforward in my eyes. Pays a reasonable dividend, a little over 3%, if I am correct. Didn't have an actual dividend date scheduled, but it tends to be here relatively soon, but not scheduled as of yet. Enter nothing crazy above this resistance, right? Got to take out this resistance. I think from a stop loss point of view, you got to be below that floor that we've put in. Too much price evidence there, right? Anything tighter, maybe you're trying to pull a swing trade and can maybe make that work. But I think that we're trying to do basically two things with these guys. Number one, I think first stop is working our way into that 150. We don't have a lot of price history there, but the little bit that we do have was a pretty consistent resistance level. We had another sideways market for several months. Last time we were, challenging 150 on the upside. When we finally broke through it, had a really good chunk of momentum. So I think for a first target, it is that 150. Beyond that, I'm looking into that 160 range. This is why it's a little bit more of a position trade. I don't expect the utility stock just to straight shoot up to 160. I hope it does, and that's what it turns into. But 150, and I'll call it 160. I know it's a little bit north of that, closer to 162 for a secondary target. Hoping to capture the dividend in this little range between now and when we get there.
All right, so we have a what's developed into a multi-month consolidation pattern, pretty tight multi-month consolidation pattern.
Right.
Beautiful. On the weekly, beautiful. Do you have any concern about just the run up into today? Does that give you any pause at all? If it broke out tomorrow, if it breaks out 2 days or 3 days from now, no big deal, right?
Right.
But if it broke out tomorrow,
no, it wouldn't give me. I could see if it did, and if it did for somebody, I would look to getting on the next trade because, hey, there's some decent windows for us, right? We don't have to buy it the second it goes above that resistance if we don't want to. So if it does that fire through tomorrow, I'll look at it and say, hey, this is momentum. This was 1 day. This wasn't like some crazy run up. It was a big candle today. There's no disputing that. But this wasn't some insane run, right? It was just a heck of a good day. But if it did concern me or you, I would look for the next setup that comes after the break, whether that's a Cody special, pull back to the breakout channel, consolidation, let the 9 catch up, whatever the case might be. I would prefer that it maybe does take those couple of days before it breaks out, right? A couple inside candles over the rest of this week and say break out on Monday morning for me. That would be nice, but it wouldn't stop me from being interested if it happened as early as tomorrow.
Got it. Beautiful pick. Beautiful pick. Beautiful pick. Tyler, I mean, you're going to get some beautiful charts from Frank. You're going to get, I mean, when I label someone a pure technician, it's good. I know I'm going to get some beautiful charts. So, strong start, Tyler. What do you got to counter?
Yeah, I want to take a look at Yeti. Yeti. If you take a look at Yeti on the weekly time frame, this thing bottomed at about $15 in March of last year. Really good recovery. This kind of reminds me of Dick's Sporting Goods, where similar space. These guys sell coolers and what are those cups called? The
thermos.
The thermos, but there's another name for it, isn't there? The tumbler. They sell tumblers or thermoses. So they're in kind of the outdoor space. That area has been on fire with the pandemic kind of spurring people to, well, they're home more often, so get out and do stuff, camping, that kind of stuff. Anyways, I like where the fundamentals are. This thing has had a very good recovery over the last year, and it has been a buy on breakouts, right? I can go back and I can identify pretty much every major weekly break has seen pretty good follow through. And the earnings has been decent along the way, enough so that it supported the price. So we had a breakout this week, which is notable because the stock market's been sleeping. Anytime I see a pop, quite frankly, similar to Frank's SRE, right? The market went down today, so you get a big pop in a name like SRE or Yeti, and it causes you to perk up, puts you on the radar. This has already broken out, right? And so I think, it took out 90. I think it's on its way to 100. So I'm going to build a trade that profits from this continuing to rise up towards 100. If you take a look at it on a daily chart, you can see a little bit more detail with the recent range. It's actually broke out a couple of days ago. I like the volume surge on the breakout. So you've got quite a bit of participation. You have buyers coming into this to support the breakout. Quite frankly, I'd like to have been in it 3 days ago when it popped above 91, but ultimately I think this will follow up to 100 and get just a nice upside follow through like the previous 2 breakouts.
Hey, will you give me option chain, another way to play? Obviously, the directional multi-month breakout follow through. Will you give me 85 naked put strike prices? Getting a healthy amount, right?
Yep. So buck 45 on 920. I don't know, what is that? 15% return or so. You could do a spread too, right? 85, 80. You're getting 75 cents. So you could do cash flow play. Could do cash flow play down here. I was looking at buying the July 95 and selling the July 100 bull call. Cost you about $2. So you're risking 2 to make 3 if you want to go for a run to 100. I like either one of those trades. I just think it's a leading stock in a good space, nice little breakout. Take your pick.
And I like, one of the things I've liked, because we've had a lot of stocks run up, all of them have held that run, right? Yep. But one of the common characteristics of stocks that have held their run in the last year is they take some time off before taking the next leg up. Yep. They take some time off, and yet he's done that. Make a leg up, take some time off, make a leg up, take some time off, set up nicely. Quality picks, breakout momentum on both of them. Like it. Frank, what do you got for us, round 2?
Yeah, I'm going to steal Yeti. Thanks, Ty. Good work.
Yep.
So, all right, round 2. You know me, I'm going directional all day long. I'm going to HSIC.
HSIC.
And before we get into it, take a look at a very long time frame. Monthly, go back a little bit. Okay, so we've broken out of some real major overhead resistance recently on an earnings pop, right? That's that huge. What the heck was that candle, right? Even on the long-term chart, it stands out, right? So we've got a major breakout that has recently occurred on these guys. That's always a show of strength, right? I mean, you know the drill, right? If it doesn't want to break resistance, it doesn't have to. But if it does, everyone had a million chances to sell it, right? Especially with that time frame. So that's kind of the backdrop to these guys. No surprise they couldn't sustain that insane momentum. Right? These guys are a medical distributors company, had a deeper pullback, right? So not kind of the textbook retracement into the 9 or even the 20 SMA that you would like. We had a big fire back late last week into those rolling short-term moving averages, in particular that 20 SMA. I always call this the pullback of the pullback, right? I know people call it different things. So for these characters, I'm looking for really one specific thing to happen. I want them to put in a higher low than that low that we put in last week. I expect that they're going to. I would like it to be yesterday's low if I can get, if I can get what I want. But most importantly, I want to see them build upon this support level, right? And I want to see them take out resistance, which would be the form of that high on Monday, which would also coincidentally get me back above those moving averages. And while I don't exactly know when this happens, or even if it happens, but assuming it's not like immediately or some weird developer, it should have that 9 crossing back above the 20, giving us that little extra bullish signal, right? If you do believe in the concept of crossovers on the moving average side of things. As it is right now, I think the entry is above that Monday high with the stop loss in one of 2 or I guess 3 locations, depending on how tight you want to be with it. Option A would be below yesterday's low. This is assuming that we get moving. I can say, hey, that low from yesterday was support. I know that because buyers came in and then pushed me through resistance. So that would probably be the one that stands out. Number 2 would be the actual low from last week, right? Because that's really where they stepped in and bought and said, enough selling. This is nonsense. Let's get in on this action. So that would be a sensible location. The third option, as always, when I present myself with, is just connecting those 2 bottoms, right? Connecting the bottom from last week, the bottom to yesterday, and using that trend line that usually puts me kind of in the middle, right? That's kind of the Goldilocks one. If you think about that, it's going to be a little below the trend line, which is a little bit below that low. Just depends on how much risk you want to take, how tight you want to play the stop loss on, any scenario, really, not just these guys. Now, targeting wise, I love these guys because you can target, in my opinion, anything into the 90s. With that long extended breakout that took forever to build, I went back in, I looked at that range, and I expect when a stock goes sideways for an extended period of time, when it does break out, it's not a tall ask to basically get that move, right? Does that make sense? So whatever we were trading sideways, I expect that to be a reasonable expectation going into the breakout itself, which for these guys, for me, puts them in at $95, $96. I'm not saying for a swing trade, that's probably what we should target it towards, but we have lots of flexibility in how we want to target this. I think maybe a very sensible target one is that previous high from back in May, early May, right after this breakout occurred. But beyond that, there's a lot of upside, in my opinion, on these guys. This would be a pure directional play. Their options aren't fantastic. I would prefer to play it with stock. I don't know. You can dig into the options and see if it'd be something you'd be comfortable with, but I would prefer this as a stock play because their options don't really stand out as awesome to trade.
Right, and another chart, and one of the things about you, Frank, that I know is that you look at the weekly chart and things will oftentimes look even better. Like if you pull up the weekly chart and pull up my girlfriend, the 9, after Janet Yellen's recent comments, I'm not calling her the Janet anymore. Not happy with her. But you have a breakout, strong breakout comeback, but catches that 9. It's almost like a double band of support. You got old resistance potentially acting as new support. You got a rising 9 that catches, gives it a little lift. I see what you're seeing. Beautiful chart. Beautiful chart. Frank, Todd, I knew you were going to be up against it, Tyler, but you brought a strong pick. Listen, this is a heavyweight matchup. This is a heavyweight matchup between 2 nice gentlemen.
We both win because we get to spend time together, and that's the way I'm looking at it.
and listen, I win because I already have. Listen, I already got a plethora of plays. Diversity might win out here. What do you got, Tyler?
Okay, I am going to go with a similar pattern, similar logic. Keep up this complementary discussion going here. So I like Roblox here, Mark.
Ooh.
I know this is one you've looked at before. It's a newer IPO, and the IPO actually
Yeah, I lost
was.
my shares on the way up of the run, got called out. So
Did you?
let's so let's see
All
what
right.
we got.
Well, yeah. Let's see. So taking a look at the weekly. So the thought process is here, and this is a very common pattern you see in IPO stocks. So for those of you that would like to trade stocks that have recently gone public, this is what I typically look for. It's nice if it finds its footing, right? It doesn't immediately rip higher. It takes some time to build some support and resistance levels and gives you a range to trade in. This basically based between $80 and $60 through March, through April, late May, finally breaks out. Okay. That was probably your first actionable buy. Now that it's broken out, you don't want to chase it. I mean, it ran from 80 bucks to 100. So you take a look at this, and if we were looking at this before this week, you'd say, well, I can't buy it now. I've got to wait for the next pitch, right? Which is either going to be a pullback or potentially a pause. And if it does pull back, 80 bucks, I think is an obvious potential support zone on the big picture. And well, you're finally getting that pullback here. So I'm eyeing this with interest, wondering if we can get some buyers to step up in the next couple of days, maybe the next week. I'm looking for support to form and for this thing to turn around. So that's the big picture. You look at the daily chart, a little more detail here. We have seen this 3-bar pullback, which has broken the 9 on the daily chart. Quite honestly, given that it ran from like 70 to 103, I'm not all that bent out of shape that it's pulled back, 10 bucks after running 35. Honestly, any kind of support level that forms above 80, I'm interested in. Today's candle tells me that there's still some selling pressure. It tried to bounce today, came back down. Might take another day or two. But here's the deal. I don't think it's ready for a directional trade yet. But if, like me, you think the dip is a buying opportunity, I think we could maybe sell some bull put spreads back in the range to bank on this bouncing and finding support here. So the strategy I was looking at was a bull put spread, and I was looking at selling the 75 put and buying the 70 put. You can get about 90 cents for that $5 spread. We're lucky enough to get another down bar before it starts to bounce. You're going to get an even better credit. I'd love to even go to 70, 65. You can almost get 50 cents down to the 70 strike. But so that's, I'll build it here real quick for you, but that's the levels that I'm eyeing. There's the 75, 70, almost 90 cents. The 70 strike's got a 10 delta, so you're really far out. You can almost get 50 cents for that guy. If we go down at all tomorrow, you'll be able to get 50 cents. Love the idea of selling credit spreads back in the range as it retests that and old resistance becomes new support.
And that's like, some of the high volatility stocks that I spend a lot of time with. I love naked puts, particularly selling way back in the range and ideally near support. Now, normally you can't get any credit when it's lifted off this high, and then you want to sell them clear back down near support of the range. You don't get that. You can with Roblox.
Yeah, and that's the thing is because it's a newer company, because it's a little more uncertain, you got that bigger volatility, and yeah, they do let you go further out of the money when you want to play.
No, and I like Roblox long term. It's one of those, patiently wait, but I might take that. I hadn't thought about selling but that's why we have this show, right? Is to make you think of things that you haven't thought of. It's a big market. You can't cover it all. Frank, what do you got for us?
That was nice.
Make the market smaller for me.
Well, I'm probably not going to do that. I'll probably just make it bigger for you. I want to go ahead and talk a little bit about Kinder Morgan, KMI. I like KMI because it's going to give us lots of options, whether it's, it's cheap stock, easy to play with shares, a lot of liquidity on the options. So if you prefer to go that route, you're going to be able to get creative as you want to get on Kinder Morgan here. We all know how energy's been performing lately, right? Nobody here needs me to tell them that. Very clean breakout, right? On this particular chart, very easy entry, just got to break 19. 19 plus your rule is what I would look at this for, whether that's 10% of an ATR, a close, whatever the case might be. We've got enough evidence bumping our head just below that 19 that I think we need to take that out before we get into the trade. I think it's a pretty smooth run to 20 on a breakout here with the secondary target at 21. With the strength that we've seen in energy, I don't think 21, when I look at it, it seems like that's a ways away, but with the strength and some of the moves that we've seen in energy, I don't know that that feels that far away when I think about it a little bit more. On the stop loss side, and then we can talk strategy, and we'll take a peek at the options, Ty, and I'll let you convince me one way or the other. Got a couple of options. One is going to be whatever candle low before the breakout, right? So since we're hanging out here today on Wednesday, that would be below today's low. That's below, obviously, the breakout channel, below some intraday support. That is a little tighter than I would want to go, but I could understand the argument to putting it there. Two, and I think this is probably the easy choice for me at least, the low from yesterday, which is going to get us a little bit more on the intraday. It's going to get me the 9. It's going to get me the rising 20. So I'm going to have a lot of glue to hold this trade together. Not that you need to do it, Ty, but I bet if we went in and looked at the hourly chart, we'd probably see it's going to get us a little bit, like say the 50, maybe even the 200 on the hourly time frame. So there's going to be some glue to kind of prop this thing up if we go below that yesterday low, getting those short-term moving averages and having that kind of bleed over into the intraday. If you are more of a position style, or if we're looking at maybe selling some cash flow, the actual pivot, that actual low that we put in back at the end of May in the general ballpark of about 18 and a quarter, getting below there could make a little bit more sense. But for a directional swing trade, I think we're probably don't have to go that far, although they're never going to fault somebody for giving their stop loss some wiggle room to operate. So breakout above 19. I like a stop below yesterday's low, minus 10 to 50% of an ATR, maybe even a full ATR, depending on you, with a target in mind of 20, maybe do a little bit of profit taking there and try to work up into 21, which is really kind of where we're running into the next, maybe at some resistance in that 21 ballpark. That's it's not these guys been around a long time, right? So there's a lot of history, but it seems like beyond 20, getting into 21 doesn't seem like a tall ask.
No, I like this chart a lot. I love the energy space. I think it has room to run. That's no mistake. Like that it's taken some time off. All of the things. I mean, it's a strong move too. Like we're a lot. It's been a strong move. More so than some of your majors like Exxon or Chevron or some of your producers. The equipment and services area. Strong move. Pretty chart. Still room to run.
So yeah, Ty, you mind looking at those options really quick? I just want to kind of see like price now to some either a call trying to roll it into a debit spread as we get into 20 or just kind of see what that would look like. I would play this as stock. I prefer directional plays with stock, all things being equal, personally, but I know not everybody does.
Yeah, I mean, at $18, it is an easy argument for the long stock play because you're not. I mean, you can make this as expensive or as cheap as you want with a $19 stock, right?
Right.
I agree with you. I think if I like it enough to buy a call option, I probably like it enough to just straight buy the stock. In trying to create a spread, it's a little tricky because you either got to go all the way to September or July, which is a little close, and there's not a whole lot of premium in the out of the money options. So I think a spread's tricky on an $18 stock. So honestly, I think long stock is probably your easiest play here.
Yeah, I mean that was kind of my game plan going into it as well.
Agreed.
It's beautiful. It's absolutely beautiful. All right, Tyler, listen, this has been 5 for 5 good picks. I knew today, like in the market conditions, it's interesting because the market conditions, when it goes neutral in the broad market, it can make some really pretty setups when the broad market takes a couple weeks off, and we're seeing that. Some really nice setups tonight. Tyler, give us another one.
Okay, so let's take a look. We talked about this pre-show a little bit. If you were looking at like your a broad diversified list of stocks today, and you were looking at percent change, Tilray was one of the top performers. There were some underbelly stocks moving and grooving today. So and we had the alternative harvest ETF on our scouting report this weekend. So we talked a little bit about the wake up that we've seen in pot stocks. So I was looking at MJ, and these are usually pretty good for cash flow plays because the volatility is high. But right now, the implied volatility isn't all that high in MJ, so I couldn't go that far out of the money. So, like for a naked put. So I wanted to look at some of the top holdings in MJ, see if I could find something that was a little more interesting. And I came across Canopy Growth, CGC, which just had earnings, but ironically, its options have stayed kind of expensive. So I like that the implied volatility rank is almost above 50%. That's not that easy to find right now in the current market, given how just sleepy everything is. So I thought, okay, if I'm going to sell a naked put, why not do it in an area where I'm getting paid a little bit more? The setup here, we're looking for a potential bottom. The marijuana space had a nice little breakout attempt today. Not the cleanest close. They sold off a little bit, but I think you can map out a fairly good little high base breakout. If it can take out today's high, you're breaking above the 50-day moving average. You're putting in another higher high on this trend. That to me would be the trigger. And I can sell, what was the strike I was looking at? The July 20 mark. You can go down to the July 20 strike, which is a $26 stock, so you're talking, what is that, 25% out of the money, something like that. Like you're pretty far out. And you can get a decent premium down there. So you go do a 37-day option, you go to the 20 strike, you sell that put, it's got a 12 delta. So you get maybe 45 cents. They're going to make you put up 200. So you're looking at about a 20+% return, which is not bad, with almost a 90% probability of profit. So bottom fishing in pot stocks, I think naked puts, CGC is one of the better choices out there.
And these runs, I'm really fascinated, whether it's pot or other areas, EVs, solar. I mean, we've seen massive runs in both directions, right? Massive runs up, massive runs down. It's been a wild ride. There's been some stability as of late, in the last month or so, where support levels have formed, take another leg up. It's going to be interesting to see, especially if it breaks those moving averages, if you can get that umph. Love naked puts, love cash flow in marijuana for sure. But man, I get it. If you cannot ignore the directional potential, right? Just be sure to take profits if you get some big ones. Don't be afraid to do that. All right.
Yeah, it's a nice space. I like it, Ty. And I agree. I think I like that one technically a little more than some of the other ones as well. So if you are looking at it more from that directional point of view that Mark brought up, I think the technicals are pretty interesting on those guys.
Frank, you came with a nice conservative oil play, and Tyler, that wild and crazy guy, hit you with a pot stock. What do you got? Start to round 4.
Yeah, I'm boring and Ty is exciting.
Apparently.
I appreciate it. I need some excitement in my life. I'm a boring dude, so I need some people being exciting around me. All right, I am going to decisions. I'm going to go with IPG. So we've got just a long, exciting, worm burner, boring type of trend on these characters, right? Been doing pretty well as of late. Kind of sold into those moving averages here the last couple of weeks, right? Or a week and a half thereabouts. But if you look at the intraday, it has been a very consistent downward trend. Obviously the long-term trend speaks for itself. I don't need to say anything about that long-term trend, right? But it's been very consistent on the intraday. And I'm starting to see on that hourly chart here, Ty, because that will always, to me, be the true intraday chart. I know that some people like other time frames, and to each their own, but I prefer the hourly. We've started to show maybe some reversal characteristics, right? We hit a bottom, we rolled up, we pulled back, but created a higher low, have yet to break through any resistance. which is also, I know that, we say this a lot because it's true. My subjectively drawn downward trend line, it lines up about with the break of that resistance level. And when you look at this back on the daily chart, that's just going to be that little inside candle that we saw here today, right? That's just taking a little bit of a bird's eye view on these guys is all. So I'm kind of thinking it looks like it's starting to turn around. I want to get back in on the action of this upward trend. I want this little intraday downtrend to be over before I, try to take advantage of it or take part, right? So I need it to break above that resistance level. I also want it to take out that trend line. That's a my preference thing. I like that 1-2 punch. It usually does line up, and if you're not careful, you can cheat a little bit, and because it's your line, right? So you can move it however you would like to do so. But I'm going to, for the sake of conversation here, I'm going to say we need to take out 32.60 at the very least. And I would say closer to 32.70 would make me feel a little bit more comfortable for the entry. Now, that would be a tomorrow entry, right? If this doesn't hit that entry point tomorrow, we might very well need to redo this because a pullback, unless it's like some huge weird red candle, I'd still be interested in this pullback. So that would kind of be the entry that I'd be looking at on these guys. From a stop loss point of view, again, I kind of like to always give myself 3 options, and they're always very similar to one another. On pullbacks, I always build it on the hourly chart, for stop losses in particular, but we don't have to necessarily do that. Either the low, right, that higher low that we put in here today, which would of course again be today's low, would be option A. Option B would be the actual low, and option C is the trend line connecting the two, hoping to get the moving averages as well, just depending on, again, how tight or loose I like to play the stop loss game. And I always do that. I always want to give myself 3 choices so I can, basically how much am I getting for a little bit more, right? And very, sometimes you get a lot more for just a little bit. Sometimes you'd love it, but it costs a lot, right? But you don't know until you price it out. Again, these are another one that are maybe fringe on the options. I think you could play them on the options, but they're not super great. And I would prefer never to get stuck in a liquid option. I think we've all done that a time or two and never want to have it happen again. On the targeting side of things, I like 36 as the secondary target on these guys. I think that is it's a ways, right? But the trend would suggest that is approximately where they're heading. All they have to do is just kind of continue doing what they've been doing, and they get to that $36 mark. 35 for a first target, or start to maybe roll some profits out, would make some sense to me as well. We can target it up to the last high, but I don't think I'm going to be a big fan of that risk to reward at that point. And if I'm that concerned about that high, let's just wait and turn this into a breakout candidate and look to trade it if it breaks that resistance level. So if that concerns me, I could go about it that way, kind of like Dick's Sporting Goods, right, from this past week, where you either played the little flag or you're waiting for that break at 100 now. Either way, it just depends on the individual trader.
I always like to know a stock's personality. This stock has a fascinating personality in the last year. Like every time it has had a deeper pullback in the trend, maybe breaking a support level, an intraday support level like the one I see in March, or violating old resistance doesn't become new support. But these deeper pullbacks have resulted in legs up. Deeper pullback, leg up, deeper pullback, leg up, deeper pullback, leg up. Very interesting. Very not the prettiest upward trend, but the legs up have been explosive when they've happened. Fascinating little stock personality. I mean, this goes back all the way to December, right?
Yeah.
I mean, you've had violations of multi-day support, and it doesn't matter. It takes a deeper leg, and fascinating little chart. Personality would support your analysis on this. So that was great analysis. Tyler.
All right.
Frank's bringing, one of the biggest advertising companies, solid oil plays, energy plays, and you're giving me Yeti, Roblox, and CGC.
Yeah.
And I love them all.
I'll give you another one that hopefully you'll like. Let's take a look at Newmont Mining. And you look at this on the daily and you say, what's he thinking? Well, you got to look at the weekly first to set the tone here, and you'll kind of see it. So let's go back 3 weeks. If you remember, gold stocks doing gangbusters or going gangbusters. Gold was up, silver was up. And you had this big breakout in Newmont Mining, right? Big breakout over the $70 level with volume, had really good volume on that week. But you don't want to chase it. So if you weren't chasing it, what are you waiting for? The same thing as what we talked about in Roblox. Give me the next fat pitch. Give me a nice little pattern that I can play at the next move. So we've seen some profit taking enter the space, and you now are retesting this 70 to maybe 60, 68 to $70 zone, which was pretty significant resistance. So my thesis is this is an area that could become a new support zone. If it does, if we see Newmont firm up, I want to participate, right? I want to anticipate the pop, and I want to build some kind of trade. And look, sometimes we bring setups that are ready to go right this second, or they already triggered. This is an example where we're playing chess. I'm thinking multiple moves ahead. I'm using if-then statements. And I think that is a sign of you becoming a better trader, where you can start to anticipate, hey, if this happens, then I think I got a really good trade here. So that's my play on the weekly. Now, if you look at the daily chart, you're going to see that it was originally a high base mark, but gold just fell out of favor. So now it turns into a bit of a deeper retracement. I'm not all that interested based off of the last two candlesticks in terms of like pulling the trigger right now, particularly with today's bounce failing. What I would want to see is start breaking above some prior days highs. I mean, if you think about it, the last four candles, you got a series of lower highs here. So I need some evidence that buyers are showing up. Let them do the heavy lifting, and then I jump on as this thing starts to reverse higher. Because it doesn't look super great right now, I'm leaning a little more towards a cash flow play versus being comfortable and confident in going directional. So I wanted to see how far out of the money I could get to sell a put or a bull put. And I was looking at the 65 strike down here, which is like Roblox, putting you well back into the previous range before the breakout, right? So not only would the breakout have to fail, but this would also have to break the 50-day moving average and have a deeper retracement, which is possible, but gives me, a fairly good odds of success. So you can sell the 65 put, you can buy the 62.50, $2.50 spread. I would want at least 25 cents to get a 10% return. This is paying you about 30 cents right now, so you're more like a 13 to 15% return. Got to see this thing turn around, but that's the strategy.
I mean, cash flow is my preferred vehicle on gold anyways. So what choices do we have here on naked puts? I like the exercise, right? Because the 65 is nice.
Yep.
This and July is the sweet spot. I mean, that's where you just gravitate, right? Like
it is at 37. Yeah. I mean, you're not.
I mean, you just gravitate there,
Well, and the thing is, honestly, Mark, is you really only have one choice. You either like the 65, you're not going to do the trade, because 67.50 too close in my opinion. 62.50, you're not getting paid enough to make it worth your while. At 30 cents on a $65 stock just doesn't seem worth it. So you got to make it work at 65. If it doesn't work, you could maybe find a strike below that, like 64, but you got to go to the weeklies and then, play with a 44-day option or something. That'll open up some more choices. Actually, it doesn't. No, 65 to 60. So yeah, I think all roads lead back to that 65 strike. You either make it work with that, or you pass up the trade.
And that puts us in the range. I mean, it puts us in the top end of the range. Will you give me gold futures? Because I always like to see, one of the things, and this is one of the things you'll find in mining stocks. Gold hasn't done jack, right? It hasn't had the volatile movement that Newmont has, which is very common in mining stocks, both on the way up and on the way down, but particularly on the way down. Gold mining stocks can sell off even when gold's neutral. That usually brings opportunity. That usually brings opportunity. So I like it, especially if you're light on gold, silver in your portfolio. Nice conservative way. Just be willing to own it if you sold a naked put, but on gold mining stocks, I am. Listen, this has been one of the things I like tonight I knew I'd get good picks. I have gotten a variety of choice. I've gotten conservative directional plays, beautiful charts. I knew that. I've gotten cash flow plays. I've gotten long-term investment type ideas, some beautiful momentum plays, some different types of companies, different sectors. This is what I love about Trade Masters. This is why we created the program. Great picks and great ideas and a diversity of them. I love it. One pick to go though. Like, listen, I think my plate's full. I think I got enough to work with tonight to see what I want to do tomorrow. But listen, I don't mind a late night snack. Give me something good to chew on
Listen,
before I
there's
go to bed.
always room for one more setup, right? At least as far as
Always.
I'm concerned, there is. I'm a big proponent. Trade lots, but trade little risk. Lots, but a lot, as Mark and I used to say. All right, Mark. I'm going to basically try to get a 2-for-1 out of Ford here this evening. I'm pretty sure you probably have Ford on your radar, but
I've been actively trading for all year, so
I've enjoyed Ford, yeah, and that recent run as they get into the EV game is certainly a nice story. I know you're a big theme guy. Hey, listen, whether the breakout came because of it or it came because of the breakout, I don't really care. That's a really strong move to the upside here. Now, I am looking at Ford from a directional point of view, but I think being Ford, there may be something that we can do on the selling put side of things to bring in a little bit of cash flow. Let's talk directional first, though. I mean, obviously, we had that big break, and there was some history, right? I mean, there was some short-term history on that breakout. And again, the catalyst was certainly there, but technically, the chart doesn't care one way or the other, right? So there was some history. If we go back on Ford in that, that $14-ish breakout range that we recently happened, no surprise. We need a little bit of time to cook, a little breather, getting a nice, orderly, mellow pullback. We've seen volume kind of low, especially the last few days. Doesn't seem like everybody's running to the hills to sell Ford. It just seems like just a natural part of the price action, at least as far as I'm concerned. These guys, I wouldn't mind one more candle. I think they're a little bit behind IPG in the development of the pullback, but that could change very, very quickly, right? So as it is right now, I think this is one of those that we just need that confirmation candle, right? Taking out today's high, taking out intraday resistance, whatever the case might be, to get in as a signal candle. I like Ford going to 1750 on this particular next swing. I like the backdrop of the Ford theme, if you will, Mark. So I don't think that it has to stop there by any means, but I think that's a very sensible, that 1750 to maybe $18 range from a targeting point of view on a swing trade on Ford is kind of where my head is. We need to get our stop loss below support, and right now, as it currently is, that would be yesterday's low, right at 1533. Now that might change before we get that trigger candle, so we'll just have to follow along. But that's where that stop loss would be, at least from a minimum perspective, in my opinion. Right now, if we try to do the intraday exercise that we did on IPG, we are pushing a little bit. We're still in that downward trend. We really haven't turned around. So this is one of those. I hope we see some good development tomorrow, but we don't actually trigger until at least the next day. That would be my preference. So from a directional point of view, I think these guys are pulling back very nicely. We just need that confirmation. Right now, if you said, well, what is confirmation, Frank? You got to pick a number. I would say we need to take out yesterday's high. Yesterday's candle would be the high low that I would be looking at for stop and entry as it currently sits, but we may get a little bit more development before we get there. And I would like at least one more little day. If I could have that Ford, that would be fantastic. On the naked put side, Ty, you mind taking a look at those puts? Let's see if I can get Mark on board, because I know you can't win Trade Masters without some sort of a cash flow play.
There's some truth to that.
So yeah, I've got to cheat. So these are the July and the 14. This is what we're looking at. I mean, the 13 would be great, right? But that's not a whole heck of a lot. I would say, I don't know, the 4. What are we getting? 28 cents on the 14s for July.
Yeah, and you got some room at 14.
Yeah, we've got some room to operate on there. I'd rather go for the upside in the directional movement. No questions asked personally, but Well, 13 would be great. And if you could get a premium you liked at 13, I think that's really interesting, Mark. 14, I think, is okay. And you definitely have some room, and you're going to get that rising 20 and probably the 9 on the weekly as well, I would suspect. In that.
You are, because I have naked puts at 14 in July
Okay,
already.
so there you go. There you go. Well, now you have to speak your book. Now I'm really glad I brought up Ford, because now you're speaking your book. So that 9, we've not had any violations of that 9 weekly for a little while. So that would make a little bit more sense. I mean, of course you'd like lower, right? You'd always like lower.
You always like lower.
Love a 9. Let's sell the 9, right?
So yeah, and that is important as a naked put seller. And I don't sell mine for credit. I sell them on companies that I'm willing to own.
Mhm.
You always want lower, right? I like 5.
Of course.
I wish you could get a great premium at 5, but you take what you can get.
Exactly. And if you don't like it, I mean, maybe we pull back a little bit deeper, and maybe 2 days from now, you are liking the premium that you're getting for the 13. But as long as you're getting that weekly on that weekly 9, and I imagine that was a big part of your analysis. I mean, we've got the price action. It's a little bit below 14, but it's in that ballpark for sure on Ford. So there's some history in 14. You got the 9. I would be comfortable if you're comfortable with the credit. Obviously, you are. You've got the trade going. I would have no objection to selling the 14. But I'll tell you what, if that thing does pull back this orderly to 14, I'm going to really like Ford. I just don't necessarily believe that that's the most likely outcome here.
I mean, obviously, I love it. I have that exact play already sold. So sold a couple days ago. So obviously, I like it. I think the analysis is good. But I'm a big believer in this story. I think the theme of Ford goes on for a long time. So
yeah, I do too. It's pretty exciting to be excited about Ford. I've been excited about Ford for a little while.
It is the first time I've ever been excited about Ford. I've hardly ever traded it in 15 years, but I've done a lot the last 6-7 months.
So nice. I'm glad. I imagine they've been treating you right then.
They have. Now,
awesome.
Tyler.
Now, Ty, how are you going to beat? You got to figure out what else Mark has. How are you going to beat that one?
I know he doesn't have this next one. This is going to be different. I've never done this type of play before. So let's take a look at, and I say play in Trade Masters in particular. So let's take a look at Apple for a second. So Apple has really just gone to sleep, right? Just not moving much at all.
Mm-hmm.
Comment, Mark, or are you just confirming?
Oh, no. I was nodding my head like when somebody says something like, the sky is blue. And you go, yep.
Yeah. So really, I don't think there's been much going on Apple all year long. I look back at this since the beginning of the year, and I'm like, I'm not really sure, aside from maybe buying the first pullback. After that, I don't know that there was much I could have done here. It's just
and there hasn't been great cash flow premiums either. It's just,
nope.
I mean, what's the IV rank right now?
0.
Yeah, I mean, it's just, great company, been boring as can be to even think about.
Mm-hmm.
So I'm going to try to get us to think about it. Okay. From a pattern perspective, you can call this a symmetrical triangle. Okay. If you want to look a little bit, and we are approaching the apex, which is usually when you get some kind of resolution.
Mm-hmm.
Or you can look at this just over the last, month or 6 weeks and say, well, we're effectively in just a sideways trading range where it's not going anywhere. Right. And your moving averages are all lined up flat, right? 200, 20, 50. So it's just, it's non-directional, it's neutral. So you could look at this and you can say, I'm going to wait for a breakout. You guys have coined the term K trade, right? Where kind of like the letter K, looking for resolution either higher or breakout to the downside, right? So we could do that. I'd be happy with somebody building a directional trade here. I'm going to go a little different angle though, and I'm going to use this low implied volatility because I don't know if it's going to break up or break down. And because I want to just mix things up a little bit. If you've done a bunch of cash flow plays, your portfolio is already short Vega. You already got a bunch of negative Vega. You've sold volatility. I'd like to buy volatility in this strategy, which makes it a nice hedge, a nice complement to a portfolio that's already loaded to the gills with short vol stuff. I'm going to do a strangle, Mark. I'm going to do a strangle. Stock's at 127. I want to buy an August 130 call, and I want to buy an August 125 put. So long strangle. These options expire after the next earnings announcement so that I can participate in any kind of ramp in implied volatility over the next few weeks. And the cost isn't that terrible because the options are cheaper. So if I go build this out, and this is one where you probably need to understand a little bit about strangles and risk graphs and everything, but buying the 125 put, buying the 130 call, going to cost me about $9.25. If I analyze this trade, yep, there's my risk graph. And I would not hold this longer than about a month. Definitely wouldn't hold it through earnings because I want to just play the vol increase. So if you look at your risk here, if I were to advance this a month out, maybe July 12th, stock doesn't move, I'm down 500 bucks. If the stock doesn't move and implied volatility doesn't budge, I would be very surprised if you don't get some kind of increase in implied volatility in anticipation of that next event. I get a little bit of a bump in vol and or a decent move up or down in the stock sometime in the next week or two. And this thing's going to be, I think, a decent profitable trade here. So the last thing I'll say is from a trigger perspective, I would wait until this starts to move in one direction or the other. You get a bunch of dojis, doji, just wait. Time decay is going to be against you with this trade. I'm really just waiting to get a candle that shows that there's some volatility coming into the stock. And then I like this play.
I do too. And I'm just interested.
I was going to ask your opinion on it. I mean, the market gives you what it gives you, right? You know, sometimes in one area it's giving you directional, other cash flow, you know, and one of the most underused, and see if you both agree with this statement, you know, multi-direction, low volatility build straddle strength is probably one of the most overlooked areas by all of us.
Yeah, I would. It's the only thing that interests me at all going into earnings season. It's the only thing that I like about earnings season is the low implied volatility pre-earnings builds like Tyler has here. I don't do a lot of earnings trading, but any that I do is this type. So, but yeah, I would say that it is generally it's a forgotten strategy, I would say. And I'm curious. Oh, I'm sorry, Mark. I'm just curious.
No, you go ahead. Go ahead.
Just like Diane, I have my answer, but Diane, just curious, Ty, why straddle versus strangle, and I'm interested in why, if your answer is the same as mine.
Yeah. Well, in this particular case, I couldn't do a straddle if I wanted to because there is no at the money option.
Right, because of the price.
Yeah. So if the stock is in between two strikes, typically you just go the first out of the money in both directions. Mm-hmm. Suppose it was at 125 though, where you could buy the 125 call and the 125 put, and you could do a pure long straddle. The reason why someone may want to do the strangle is just because it's cheaper. Mm-hmm. You're buying one out of the money. And you might have slightly wider break evens, but it shouldn't be that big of a difference if you're just going one strike out. So I think the strangle is more common because A, you can always build a strangle, you can't always build a straddle, and B, it's cheaper. And I think that appeals to people.
Yeah, and that's kind of my take as well. I mean, the way I kind of see it is when you're going one out of the money on a strangle, effectively it's the same thing and it's just cheaper. At least that's what it feels like to me. Right. You're not giving up a whole lot, but you're saving a couple of bucks. So I do prefer the one strike price out strangle myself. Even if it is right at the money, I usually prefer that method.
Agreed.
All right, so tonight, and this is impossible to declare a winner. I mean, seriously, this is impossible. You have, you know, a couple nice energy plays. Area I like, you know, just recapping Frank's pick. HCSIC, IPG, solid conservative. Technically, you got Ford, who I'm already playing already. Obviously, I love a solid lineup. You know, a diverse mix of interesting plays by Tyler, Yeti, Roblox, marijuana play, Newmont, Apple. I mean, that is a diverse pick, especially the way he's playing Apple. This is what Trade Masters is about. Multi strategies, great chart, great analysis. Seriously, everyone's a winner. I've had a lot of Tyler. I've had 2 coaches shows with Tyler lately, a couple Trade Masters. I've been with Tyler more than I've been with my own kids in the last 2 weeks. So I'm going to declare Frank the winner. so
Tyler,
I can
that's
be with
just a
him.
nice way of letting you know that you got, bud. Either that, or he just wants me back on Wednesday. I'll let you
Just get another
decide
week
which one you
like,
want to believe.
So listen, but it's great. I mean, this is what I like. This is what I want. This is such a beautiful dish. If you're a trader out there, this is a great program, because I mean, this is great food for thought. This is great for food for thought. I'm going to take a couple of them. I'm going to do it over pizza. I'm going to go order some pizza right now. If you enjoyed this content tonight, check out Tackle Trading. We got great content throughout the week. We just did a 2-week thing with Tyler on the Coaches Show from an investing point of view. Tonight was all about trading, but we got into Tyler's mind on investing and how he approaches investing. Nonstop content. We try to provide for our pro members. Give us a try and see if it's for you. Go to the store tab at tackletrading.com. Sign up for that 15-day free trial. And for you pro members, we got Traders Lounge tonight with Greg Holmes, a regular guest here on this show. Greg will be hosting the Traders Lounge, a program where you can come and ask any question you want. Any question you want. And if you ask him about CGC, Greg's probably not going to like it, because they call him Old Money Homes for a reason.
He might like SRE though. I might be able to get him on that one. Yes,
he will like SRE and KM. He'll like all of your picks probably, Frank.
Yeah, Greg and I are kindred spirits, I think.
I've loved it. Seriously, this was great. Everyone out there, thank you for watching, whether here live or on recording. We really do appreciate you. We love this community. We'll see you next time on Trade Masters next week. Take care,
team.
everyone.
See you guys.
Well done, gentlemen. Oh, we're still live. Let's not, before we get into all the.
That's the danger. That's the danger when you don't have